SeriousTrader. I'm back again, still talking about Forex trading, how to identify a good trading method. And today I want to focus on the third bullet point, must be based on technical analysis. In previous videos, we talked about how any Forex trading method, before being considered, must first be a complete method, and second, it must teach specific risk management rules. Today's video is how to find the right trading method for Forex how finding it revolves around technical analysis. And I believe that the best Forex trading methods are based on technical analysis, but are not 100% mechanical or automated. As you're already aware, there are two primary forces acting in the Forex markets: fundamental data, which include such things as balance of trade data, money supply, interest rates, economic and financial reports, etc. Then there's technical data, which includes such indicators as moving averages, stochastics, average directional movement, etc. So why should a Forex trading method be focused on technical indicators? Well, first, if you're attempting to trade on fundamental data, that requires you to be available on a real-time basis at whatever hour of the day or night that news or that data impacts the markets. And you must be able to act on that news before or at the instant that thousands of other Forex traders around the world do. Otherwise, you're going to miss whatever opportunity occurs based on fundamental trading. That means that you have to be predictive. In other words, you need to know the outcome of the impact of that data, and you have to be reactive in terms of being ahead of the reactions of the rest of the market. And it also means trading on the fundamentals also means that it's less about the actual data and more about the market's reaction to that data. So that's what I mean when I say you need to be predictive and reactive. You need to know how the market's going to react, and then you need to be able to react before the markets actually do. And if that sounds confusing, try trading that way. So instead, we advocate technical analysis being the basis for any trading method that you would employ. Technical analysis allows a trader much more time to make a smart decision. Utilizing technical indicators means essentially that the fundamentals are already reflected in the price of the market at that given instant. What this really means is you're working more often with a slightly lagging indicator, but the advantage to that is that when you're using a Forex trading method based on technical analysis, it means that you spend less time identifying potential trades and more time identifying the trend in a Forex pair. So once you've identified a trend and you look to enter a trade, you have more supporting data for the trend's existence than if you're simply trying to trade on the news, so to speak. So, and as well, by using technical analysis and applying it through a trading method, you can trade the markets on your own terms. So you don't have to day trade. You don't have to be up at 3 o'clock in the morning Eastern time, wherever you happen to live. You can trade the markets when you want to trade them and how you want to trade them without having to grasp the minute details of what a fundamental report really means and how the market is going to react to that particular news. Any of those fundamental reports have a life cycle. So a trend may be very short term, it may be short term, it may be longer term, but the fundamentals will provide the basis for the trend, and the technicals will then confirm the existence of the trend for you. By trading on the technicals, you're riding more of that middle segment of the trend, which is still a very profitable segment to be riding on. So that's why we advocate using technical analysis, but on the other side of it, it should not be fully mechanical, because you need to have some interpretive capabilities left open to you. An automated system, I just fully don't trust. a completely mechanical system, doesn't allow you to apply your own read on the markets. I mean, if you get a signal that tells you to buy when everyone else is selling, obviously a mechanical system in that instant is wrong, and you don't want to be at risk of that. So you don't want a completely mechanical, but you do want to have something that's based on technicals, so that when you get into a trend, it's something that the technicals have told you exists, and you have a better opportunity to potentially profit in the markets. So that's our review for today. I'm SeriousTrader. I'll be back again later with the last bullet point on Forex trading and how to find a good trading method.